Peter Mcguire joining us this morning. Peter, good to have you with us. We're wondering what to focus on this morning, given that things seem to be a little quiet. Where are you, what's your attention on this morning?
Well, good morning, Abha. Thank you for inviting me on the show. A couple of quick things. First off, keeping a very close eye as far as DOJ and what's happening there. Dollar's come off, and that really is showing, I think, a mixed bag as far as perceptions. Will the Fed raise? We're waiting to see what happens as far as, over the next 24 hours and their comments tonight from those July minutes. Also taking on board Dudley's comments. And I think it's just a little bit of a wait and see. Crude's up, dollar weakness, and all of that's fueled commodity prices and, of course, stock markets. And where the dollar trades, you're seeing that very strong push up as far as yen. So it's an interesting time for traders.
Peter, good morning. Just before you joined us, Abha and I were just having a discussion about, a general view that there's a lot of liquidity, so it's going to go into stocks. But Peter, I was just thinking at a personal level, if we had a lot of money at a personal level, and we weren't really sure where the markets were going, we wouldn't put it there. We'd leave it in cash. Could it be that as the world heads more and more towards a negative interest rate scenario, cash has become a commodity? Because if let's say you had $1 billion, you can't really put it in a warehouse and you have to leave it at the bank. So could we be in a situation where people are happy to pay banks just to hold their money like you would pay for holding copper or iron or something else?
Well, when we think about that, Ashu, you would have to agree with you. And that's been quite nicely represented as far as Switzerland and, of course, other European countries. So they're certainly offering that negative interest rate. Have a look at the returns coming out of Japan. So you've just got to also pick what currency, because if the US dollar comes off further, then there's certainly going to be stronger appreciation across a basket of currencies.
Right. What about crude, Peter? What's your sense about what's happening there?
Well,
lost the line there. We'll get back across.
Metaphorically speaking, crude got lost in translation. Yeah. So that's where it seems to be. But it's interesting, since you brought up crude, I just wanted to mention, looks like crude has found 40 as a kind of a level on the bottom. Actually, I've been hearing numbers, and I wouldn't be surprised if we start to hit 60, Abha. Now, the question isn't, is there enough crude in the world? Is there not enough crude in the world? The question is, what do the traders think? And, maybe Peter can share his views on that.
Well, Peter, we lost you there.
Yes, Abha, sorry about that. Technology. See, we have those. Sometimes they're good and sometimes they're bad.
Absolutely. Go ahead, though. Go ahead.
But you were mentioning about the crude price. Well, we've seen a dramatic run-up over the last, say, 4 to 6 trading sessions. Look at WTI. Brent's edging closer to 50. It's had a very, very strong uptick, and of course was probably oversold to some point. So that's a bit of a consideration, what we've seen.
I wonder what Peter's up to this morning, Ashu.
Call drops.
He's on the move somewhere.
So just on crude, coming back to it, just looking at the charts, looks like technically, once it finds the bottom, it could actually retrace about 50% of where it dropped off from. Now, you'll wonder what that means. Well, retracements usually happen in a bear rally, and they could be very strong. So crude, as you remember, I think at the lowest it touched was 27 or something, and then it moved up. Maybe the retracement is right up to 60.
Okay. Peter, there seems to be a lot of talk about emerging markets that are now coming back into focus. And I'm talking, apart from India, even about some of the earlier battered ones when we saw crude completely slip and slide to these lower levels than the 30-40 mark. Are you also in agreement with that view? Would you start taking a relook at some of the other emerging markets?
Absolutely. I mean, you've only got to put your mind across, have a look at the Vietnams, have a look at Southeast Asia. All of them have had a nice, run up, and they're all looking relatively good. So I think that there's more more room at the moment across those markets to certainly have more upside.
Right. So, Peter, I was just coming back to crude. One of the interesting things about crude is that when it was at 140, 150, people thought we were at peak oil. And when it was at 27, I heard numerous experts say, well, I mean, the world's flooded with crude. And I was thinking, we live on the same Earth, but between 130 and 27, experts went from North Pole to South Pole. Is it possible, Peter, that we are really heading back to $60 to $70 in crude just as a technical rebound? Because retracement rallies do take stocks and commodities up at least 40 to 50%.
Yeah, absolutely, Ashu. Well, look, I don't know whether you'll see 60 to 70, but you may well do. Depends on how much that US dollar comes off, of course. And considering where we go as far as rig count and what happens with the US. So if they continue to add rigs, we do know that we had 1,400 or 1,600 rigs, I think, on the market going back to 2014, collapsed to 316 in May of this year. We're back up at around about 395 at the present time. So there's more upside there for more rigs coming online, which is in turn going to provide more supply. And the US is certainly going to be a larger producer than we probably forecast. So I take your point as far as peak oil. I take all of those considerations on board. And, yeah, I wouldn't be surprised to see a plus 50, 55 over the next couple of months.
Okay, what's the latest on India, Peter? We seem to be stuck around these levels, pretty good levels, but still stuck nonetheless. So what's your latest view on India?
Well, considering, the US dollar, considering what we've got as far as emerging markets in the Indian, the Nifty and the Sensex, I'm feeling fairly confident that it's going to be a nice run up to Christmas. I'm not suggesting, shooting the ball out of the park, but I think that, the growth will continue. That low interest rate environment, we're looking for markets that have got strong capacity and, of course, plenty of upside, and India falls right into that sweet spot. So as markets possibly take hold of that low interest rate, what happens as far as Fed, I think there's going to be a continued push for many